Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis for Monday, June 27th through Friday, July 1st, 2011 is brought to you by Realtic. All right, guys, let's get started here. Taking a look at the charts, you can clearly see that the market is continuing to be under pressure. This is a view of the 10-minute intraday chart zoomed out to 5 days. So again, you're looking at 5 days ago. This was Monday, Tuesday, Wednesday, Thursday, and Friday. And what you can clearly see is that if we go back to the previous Friday, you close right around the 127 level, and you closed it just below that this following Friday, this past Friday. So really net, there was not a lot of a loss on the market. It was more of a flattish week, but just a slight negative to it. Now, the key is, again, asking yourself, well, where does this market go? The interesting thing I would say first and foremost is the action on Friday over the last 6 weeks or so has been distinctively bearish. The Dow on Friday was down 115 points, NASDAQ down 34, S&P down 15, and we've seen pretty much every single Friday be down. This is very, very strange considering what we've seen over the last couple years. Last couple years, Fridays are notoriously slow days, very calm, generally neutral to upside. And again, what this is telling us is that no one wants to hold over the weekend. When you see selling on Friday, it's only because traders just don't want to hold over the weekend. There's too much risk involved. It seems like every time you have a weekend period or any amount of days, people are worried there's going to be some new event out of Greece, out of Europe, Portugal, Spain, somewhere in the world. So again, that's really what's been driving this market down on Fridays. Now, if you zoom out, this was a beautiful call from last week. There were many great calls last week, but the main one was the inverse head and shoulders. We made a lot of money in the intraday stock chat and the research center this past week. And again, for those of you that are interested, you can definitely take the free trial. It's a 7-day free trial. Go to inthemoneystocks.com. You can join the research center, which includes everything listed under the research center at inthemoneystocks.com, or you can take the intraday stock chat, or both, whatever you prefer. But the key is, again, notice this inverse head and shoulders here. And I called this out and I gave the exact target for it to complete, and we made very, very good money. If you take this neckline right here and just draw it across, this is your trend line for your neckline. Now remember, an inverse head and shoulders must break the neckline for it to begin to complete itself. And we saw this inverse basically early last week. And again, I even saw it last Friday. We talked about it Sunday night in the No Hype Live broadcast, which is live broadcast that we do for our members of the Research Center. And I discussed it Sunday night and said, listen, guys, if you get above this level right here, if you get above this white slanted trend line, it's going to play out to a target of 129.50 to 130. That's going to be your target. Sure enough, on Tuesday, it gaps above, as you can see right here. It even gaps above this orange line, but all it had to do was gap above this line right here, and it was going to go to that target. So again, being positioned long like we were, we nailed that, and for beautiful profits. Look at the move up you had. And again, we knew the target, so this allowed us to take a majority of our long positions off the table up here in this 129.50, 60, 70, 80 cent level. All right, beautiful game right there. And again, once we did that, sure enough, the market completed its target and then selling resumed. And again, this came and coincided on Wednesday with the Federal Reserve coming out. We had Ben Bernanke's press conference. I think everyone was anticipating some sort of QE3 announcement. Yes, we'll continue to push money into this economy, and that did not happen. And ultimately, when Ben Bernanke started to talk at around 2:15, the market just started to dive here on Wednesday. The selling continued on Thursday, although we got that late day announcement from Greece that there was an austerity package 5-year deal reached, and that sent this market up. Now, that austerity deal still has to be voted on by the assembly there in Greece, and that will happen, I believe, on Tuesday. So there are a lot of ifs and buts out there that we still need to watch. This market is not going to get any less volatile, guys, even though we're coming into the July 4th weekend, which is not this current weekend that we're in, but following next Friday. So next Friday, the weekend will start. That's the July 4th weekend. Remember, the markets are closed the following Monday. It's going to probably be a little slow on Friday, although we'll have to watch that jobs number. I have to see if the jobs number is going to be released on Friday as well, but in any case, market pops up, and then Friday again, people just do not want to hold into the weekend and sell off. Now, going back to this coming week now, let's talk about going forward. First of all, the big thing you're looking at here, this is your line right here in the sand, guys. See this pivot low over the head of the inverse head and shoulders right here, which was a bullish pattern that played out? That's your pivot low right there. You also want to follow it with this double bottom. If you take this level out this coming week, it's very possible you will see continued sharp selling down. All right, and this level is at 126.30 to 30. 126.35. 126.30, we'll call it. That is your line in the sand to watch this week. If you close, and this is a close below, not intraday, I want to see a daily close below this level. If you get below that level, then you start talking about major downside in this market. As long as you stay above here, they could try to float this market up into Friday, the jobs report, and obviously the July 4th weekend. So watch very, very closely in this coming week, guys. That same area coincides with a daily major level here. The major level on the daily stretches all the way back to 2009. This is what is so significant about looking at the charts, folks. When you look at the charts, you must see all. And this is, again, one of those lines that is an epic line. This is a line they will talk about for years and years to come. And, of course, the media is not really smart enough or good enough to pick up on this necessarily. But this trend line is everything. Connect the low pivot from 2009. Connect it to 2010's lows. Drag it all the way up, and look at where we are currently. If we zoom in, guys, you're right on that level right here now. If you get below, which, by the way, coincides with basically a close below the 126.30, 126 area, if you get below that level and confirm, and confirmation is a key proprietary technical level that we teach in the research center and into the intraday stock chat, so again, take that free trial. But if we get below that, then that's when I would be worried about this market. I know it seems crazy that I'm not really worried about this market right now, even as much as we've fallen. I mean, we've fallen from my pivot high, which I gave, by the way, we call this exact high within 8 cents of the SPY. 8 cents, guys. I said, guys, this is the top, and it went 8 cents over and then reversed down, and you can see what's happened since then. Again, we were short there as well, which gave us some good profits, but as long as we stay above this 200 moving average and this line from 2009 to 2010 lows, you can say to yourself this market has every chance in the book to bounce. All right, now, do I think it's going to be a big bounce? No. I think it's going to be a small bounce at best. And right away, if we confirm below this line right here, if we confirm down here, then this market is in big correction territory. I mean, there's a lot of things going on here, guys. I can't stress that enough. There's a lot of things we're going to watch. I think this week will tell all. You're either going to have a bounce week, which I think is slightly more likely than a down week. But if you don't and you get below and confirm, then this market could literally trade all the way down. First stop would really be down here, in my opinion, which would be around the 123 level on the SPY. Of course, you want to play the levels. The levels on my charts are everything, guys. 123, notice this pivot high. This is how big this level is going to be. 123 will be a long opportunity for a few-day swing at least, if not more. And then once you get that bounce, you may retrace back up to that same level, and then you want to look for shorts again, all right? So it's a big week. We're going to make a lot of money. We've been making money consistently. What I've said to the traders here in the intraday stock chat and the research centers, what I love about what we do, folks, is that it doesn't matter if the market goes up or down. It doesn't matter. We're going to make money regardless. And the beauty of it is the market's been going down like this, and we've made a majority of our money on the long side. Why? Simply because we're buying master levels. Based on our technical proprietary analysis, we're buying levels on certain charts, on stocks, on ETFs. The Qs, for instance, we played beautifully. Last week made some great money on that, on the big bounce off that inverse head and shoulders. And as long as you know pattern, price, and time, you need nothing else in this market, and you can profit. You can profit short, you can profit long. And it's a great example of how, even though the market's been falling, we've been able to make money on the upside. All right, so we're going to continue to do that in the coming week. I'm going to put out more trade alerts. If you're going to take a free trial, I suggest taking it today. This is Sunday, by the way. I'm doing this video Sunday. Taking it because tonight I'm going to be posting chart alerts for trades early in the week. Monday, Tuesday trades. Be ready because they could trigger and you could make a lot of money on them. All right. So again, if you're going to take that free trial, make sure you take it early in the week. It's going to be a big time here. I plan on making many, many trades this week in the research center for swing trades, and these are longer, more than basically day trades. Swing trades are 1, 3, 5, a week or two type trades, which a lot of you guys that work 9 to 5, those are the types that you're going to want to take. All right, so again, get involved. Take the free trial of the research center at inthemoneystocks.com. Now, I want to go over a couple other charts. First of all, the dollar. The dollar is a very important chart because essentially that's what the market's doing in reverse. And the dollar goes up, markets go down. Notice what the dollar did on Friday. The dollar UUP, which is the ETF for the dollar, was up 13 cents. That means the market's probably down. Was it down on Friday? Absolutely. Dow was down over 100 points. All right, so you have to know that, and you have to recognize it. All right, the dollar was falling here early in the week last week. That's when we got that bounce. Remember that inverse head and shoulders play out. Late in the week, we got some weakness again. We saw that selling. The dollar again was moving up. So it's, again, inverse any way the dollar is going. If the dollar is going up, markets are going to go down most likely, and vice versa. If the dollar is going down, markets will go up. So the question is, well, which way are you going to go? And you can see the dollar has been very choppy over the last 2 weeks or so, down, up, and that's kind of what the market's been doing. Notice how last week we started the dollar here, ended the dollar essentially right around the same level. Markets, as I showed you on the spiders intraday, ended at the same level approximately. We started the week around 127. We ended the week basically at 127, just slightly lower. And again, that's very key to understand. So the question is, in my book, is the dollar going to first resistance, which is right here on the UUP at around 121.90, or are we going to pull back again to this pivot low here, or possibly even down to here? I would say with what's going on in Greece, you almost have to favor at some point the dollar moving up. Although, again, the big question is going into a holiday weekend, will they try to prop this market up, especially if volume gets a little bit lighter? Watch that austerity vote this week, guys. That's going to be big. Jobs number later this week, ADP on Wednesday. That's going to be big. There's a lot of key data coming out this week that's going to probably make it a pretty volatile week. The question is it lower or higher? All right, again, I'm going to put out trade alerts today and tomorrow. We're going to get this market rolling. We have some open orders out there, or at least we have a one open position out there. I moved out of essentially everything by the end of the week that was long except for one play with profits. And again, we're just holding that one play, which is flat right now. I love it actually right now. You can join the free trial and get that play right now and actually buy it. It's around the flat line anyways, and that's a beautiful play as well. So again, it's all there for the taking, folks. And let's go to the GLD chart. Gold. What's going on with gold? Now, gold's a beautiful thing here, guys. Take a look at this. You moved up. You had this big pop and then a slow float back up. So you had a big pop, drop, slow float up, then you pulled back. Notice what happened here. Notice this line pivot high. You came up, pierced it, and then that was a trigger sell. Market could not get through this pivot high on the GLD, which is at around 151.50. The drop that you've seen on gold has been drastic here. You tick out this pivot low. Where are you going to most likely go? I have a buy target right down here, folks. If you get to this point, you can swing trade it on the long side. And again, I'll cover this in the nightly videos in the Research Center each night. We'll go over these setups and make sure they're still valid. And that's the key, is everything is changing. Market's like a living organism. It changes from day to day, so you always want to be on point here, understanding and watching the nightly videos in the Research Center, which again, everything's included in that Research Center for the free trial and for $49.99 a month, so I encourage you to get it. But in any case, see that right there? That's your buy target. Notice it's the pivot low here, pivot low right there. This is your area. All right, if we come down here this week, I will be a buyer there of the GLD. Let's take a look at the SLV. Now, SLV was a great call last week, guys. Beautiful call last week. Why? Because essentially I told my Research Center subscribers that as long as you do not close above the 20 moving average here, which is yellow, you can be short the SLV. So right here where it was hammering out, and I said, listen, guys, if you want to short this, short it. Because the stop is so tiny. If it closes above right here, you just move out of the trade for a minor loss, a couple penny loss essentially. And as long as it's below there, this is a classic in spirit of bear flag. And bear flags, as the name would suggest, mean there's downside in the market. And sure enough, look at this downside on Thursday and Friday. The trade, essentially a major profit trade. Anyone who did take that off the alert has obviously moved out of half of the position for a big profit. Break even stop, money management, discipline is number one here at In the Money Stocks. You will learn it. You will excel at it. By the end of the time, you're with us for months. You will be a pro. Bottom line, you follow what we do. You will understand the methodology. You will learn the methodology, and you will profit. Okay, and again, bear flag playing out. Now, again, you're going to have a little bit of support right down here. You're very close to support on the SLV. And then after that, I'll look for the 200. I will be a buyer of the 200 moving average, most likely, okay? All right, but right now the bearish portion is playing out, and then I'll look for a buy down here in this general range. There will be support right here, but I don't know if I'd look for a buy there. I'd let this thing flush a little bit more and then see if you can get it cheaper. All right, now again, I will update the SLV every night in the nightly videos as well, so stay tuned for that. Let's take a look at the USO. Now, the USO was a classic play last week, guys. We nailed this one. I had a buy alert out on the hot charts and alerts, which is part of the Research Center, right here. All right, it triggered on Thursday. Early in the day on Thursday, it triggered. By 3/4 of the day through on Thursday, I had already moved out of half the position with a huge profit. That's how good these alerts are, guys. Literally, sometimes they're so good that within one day, you'll be in and out of the position, or at least in and out of half. And that's what we did there, folks. And again, a beautiful little pivot low. Look at that. If you knew these levels, you would have been a buyer there as well, and you would have made a nice profit within one day of this trade. And this was a swing trade, a multi-day trade. But bottom line is, when the profits are given to you that quickly, are you going to be stingy and say, oh, I want more? No, you're going to say, thank you very much. I'll take my money and run. Because you know what? You never know what can happen the next day. Now, again, I think there's a lot of support here on the USO. I will have another level on the USO to buy down here as well. So we will watch very closely for that as well. But nonetheless, the markets are unbelievable right now. Best swing trading environment we've had in years at this point, guys. The money, we're banking left and right every single week, profitable. And again, that's in a down market, we're profiting. Not many people out there can do that. 90% success rate. I repeat, 90%. That's essentially, basically 8 to 9 trades out of every 10 will be a profit. All right, and then of course there's one loser out there every once in a while. It's just the nature of the beast. I'll never claim that I'm never taking a loss because I do take a loss here and there. But the key is keep your percentage up, and that's done by discipline and knowing price, pattern, and time. Anyone who tells you out there that they never take a loss is lying. Trust me on that one. And again, we're higher than basically every hedge fund. And I said this earlier in the week is that I've had hedge funds come and try to recruit me. But bottom line is, with my personal account that I trade, it's not worth it for me. I can do what I do here, educate the average person, help them fight the institution, fight the hedge fund, and I'll make just as much as if I was making, working at a hedge fund out there. So bottom line is, use it and abuse the methodology, guys. It's here for you. Learn it. Join the research center. Join the chat room. Take the free trial. It's a 7-day free trial. Most of our members make enough in that free trial to pay for multiple months, if not years, at the research center. It's worth it. In any case, take care, folks. Let's get some work done this week. Let's make some profits. And I'll talk to you this week. Take care, guys.